Hi everyone, my name is Simon Mishevich from Optimise Accountants, and in this video we are going to be talking about the 40% inheritance tax on pensions, but some of the mitigation plans that you can put in place. And the first part we're going to be talking about is the 25% PCLS, which is the lump sum payment that you can take from your pension tax-free. Why is that beneficial? We'll see later on. There are some other great video channels that you should be watching if you're looking to move from the UK like I have, because you're sick and tired of the Labour Party, sick and tired of the UK government taxing you on everything you have. Then maybe time to leave. And I've got a great channel talking about Brits leaving the country. You're obviously watching the channel in the middle, UK property tax. But if you think about Spain and think about moving there, then that channel on the right, moving to Spain, and in particular Marbella, like myself and Louise, then feel free to see that channel as well. There is a UK property tax guide, which I've done. It's a new ebook for 2024, 2025. Feel free to download that using the QR code. And I did a video a long while ago, 87% UK tax on pensions, and lots of controversy was caused on that. It's probably one of the biggest videos that I've launched. And it was talking about the 40% tax, but also the 45% tax of taking money out, and then the impact of the nil rate band on your home as well, which in all was our 87% tax. And I was really furious about that when I was doing that video because of the impact that it has on many family members. And I want to talk about Meet Jeff. Now, imagine we're in 2027. Jeff here is age 60. He's retired. He's worked all his life. He's never had any breaks. He's been told to put into the system, into the pension system, because he was told that the state pension wouldn't be enough for him to have a nice lifestyle. So he did exactly that. He followed what the government guidelines was telling him. Now, unfortunately, he's got critical illness, so he has between 6 to 12 months left to live. And I'm sure you know people like that in your place. I know I have, and it's a horrible story to have this in place. He has 2 children, wife passed away, so he's just got his 2 children now to pass on his legacy. But now Jeff, of his remaining £100,000 that's in the pot, is now subject to IHT. You know, life's not bad enough as it is. You know, he's retired all his life. He's been told by the government to put all this money to the system. He's got critical illness. He's worried about his family, and he wants to pass on his assets. But now being told that the 100,000 that he's got remaining in his pension will be subject to 40% tax. It's demoralizing, and I've seen it across the comments that you've been putting in, and feel free to share your thoughts, to share the thoughts and fears that people that you know are having with this 40% inheritance tax on pensions, which is just ghastly. To avoid this, I have created 4 videos, which will be linked in the description box. Please feel free to have a look at that. I will try and tie the video links into this video as well at the end, in fact. So this first one, we're looking at the PCLS, but there is one on gifts, part 2, how to make gifts. Part 3, family investment companies, which will be interesting. And finally, leave the UK as well. Now let's focus on what's happening here. We're under the Labour Party, autumn 2024. Pensions in the UK will be subject to inheritance tax starting in April 2027. And that's really where we are at now. So let's imagine that before, we've got Jeff here that's put all his money into pensions that he could because he was told to do that by the government. The government now ripping it from underneath his feet. So before and after 2027 was what we're going to focus on. So let's focus on the £100,000 pension just to keep things nice and easy and tidy. IHT charged before 2027, no tax. After 2027, £40,000 worth of tax. Net pension, £100,000 and £60,000 is the net position, and then of course the tax liability. Now, if you're in Jeff's shoes, you're kind of thinking, well, after 2027, am I better to die before that? Do you know, that is the heartbreaking thing. The 25%, this is what you can do about it. This is one of the mitigation factors. So the 25% Pension Commencement Lump Sum, PCLS, allows UK pension holders to withdraw up to 25% of their pension pot tax-free retirement with the remaining subject to income tax if taken as income, which is great. So you could do that, enjoy your life. I think that's what this moral story is rather than pass it onto your children and it being 40% tax on your pensions, maybe enjoying your life would be a more suitable choice. Here, before 2027 and after 2027, and then the third column now is if you take the PCLS. So you've taken £25,000 out of it, so you've now got pension left of £75,000. If we've got IHT before 2027, let's not forget, there was no pension tax at all. Maybe that's what we should call it, pension tax. For Jeff here, before 2027, it was zero. If he died before then, again, what a story that is telling us. Die before 2027 and everything is okay. Just completely, well, just wrong. After 2027, your IHT net charge is £40,000 if you don't do anything. But if Jeff takes out 25% PCLS, then he'll have £30,000 IHT, which is the 40% of 75. So in this case, we've got net position, net pensions of before 2027 is the £400,000, which is the right thing, if I'm totally honest with you, and bring back the Tories to scrap this nonsense of a tax that the Labour Party have brought in. How they've lied to their voters is untrue. After 2027, it's £60,000 because £40,000 has been wiped out in form of tax. If you take your PCLS, however, before this kind of tax charge and spend your money, then obviously you're passing less to your relatives. But here you've got £75,000 less £30,000, which is now £45,000 net. But you've already taken £25,000 out tax-free to enjoy it and spend it on your kids, spend it on yourself, spend it on family holidays, etc. You are going to be remaining out of all of that £70,000, which you're paying less tax. So that could be more of a suitable choice for pension holders right now, is to consider the PCLS. I would say that you do need to get some financial advice throughout. I'm not qualified to do that, but if you think about pensions, then maybe you should be speaking to your financial advisor, as I've said here. So you can make gifts, live for 7 years, and then it wouldn't be subject to IHT, or better still, just enjoy your life. You've earned it. Yes, all right, go and spend it on your kids on holiday or something, but you're then spending quality time with them rather than stuck at home watching TV, if you're able-bodied, of course, to do that. Throughout, I've been saying, speak to your financial advisor. I'm just going to re-echo that. But on the whole, taking 25% PCLS may be a good thing for you. I have got a new service, which is the UK Inheritance Tax Advice, which is the QR code there. It's an hour, 90-minute call with me to talk about how you do best planning for you and your family to get around this nonsense of a UK Labour Party tax changes that we're now seeing.